This is Justin Pulitzer. This is my weekend review video for Sunday, May 3rd. A lot to cover. Going to try and make this video shorter than last week's, and let's just jump into it. So this week we had the Fed. We also had some economic data, and the economic data has been coming in abysmal. GDP came in at like 0.2%, well below what the consensus has been looking for. The employment numbers were, while they were construed as more bullish, really weren't that great. I mean, the labor participation rate is really still very low, and you're really getting a continuation. I mean, the prior week we had some junky durable goods data. So let me just jump in and show you what I'm seeing in the technicals. So I had said that I thought that this day here, this reversal, this sort of down test of the channel and then reverse, this range was going to be key, and then the Fed range was kind of inside of that day, and it took the next day to really get the reaction. So I'm going to still go by this day's range. So anything above this 211.5, I think will get a squeeze going, and you'll get probably new all-time highs. Anything below here I see as more dicey and risky, and you can see here that after the Fed day, we had a pretty nasty break, and if you were following the trend, the action of that day, a lot of this came on the heels of Twitter and Yelp and some of the major momentum stocks. Apple was weak, and I think it just ran a lot of stops and took people down. And you can see it still, though, closed roughly above this trend. You can see any looks below this trend line before have been bought, and they were this day. And the thing that was dicey about Thursday was that you really knifed through these lows. It was a close below the 50-day moving average. However, as you guys know, I discuss distributions, and that meaning price distributions, and you can see it still held the tail line of the upper distribution. And I've discussed this 207.84 being anything below there to be cautious. We sort of had a look below, fail, and closed up higher. And then the next day, which was Friday, we had a gap above the upper distribution and the 50-day moving average and go, which caught a ton of people's shorts. There were probably a lot of people who were short here and moved their stops down accordingly to this day's high, and I think a lot of them kind of got their bells rung here. Now, Friday's action was bullish. There's no doubt about it. This is almost a Mariboso candle, which just means you open on the lows and close on the highs. You can see there's like a baby little wick below here and a tiny little bit on the top. But for the most part, this is a pretty strong big body candle up. And the kind of the loose change here to me, the caution, is that if you look where we closed, it's roughly where the body of the big reversal day ends. It sort of like begins here. If you just take a look on the chart, I mean, if you look here, it's roughly in line with these tops. So that to me has a little bit of caution. We're also still below these reversal tops. You can see we closed into those wicks, but we're not above there. So I'm a little bit cautious. I'm optimistic in the sense that we are firmly in the upper distribution over the 208.97, but we're not above these highs, these sort of highs that have been causing resistance. So I would say anything, like I said before, anything below this 211.27 to 211.5 to me is still a little bit iffy and cautious and still within the confines of this chop zone, although be it in the upper distribution, which is better for the bull case. If we're, like I said, if we're strong early this week, like if we have a gap on Monday, that might catch some people, and if we can get above here, I would say that that would lead probably to the higher highs. And I've been discussing these 1.618 fib extensions, depending on where you measure them from, coming up to 211.40 and to 214.17, so that would be short-term targets. Of course, it's also possible there's some type of a blow-off top, and that takes us to the upper part of the channel, which is considerably higher depending on how long it takes to get there, and that's up starting in the 217s at the moment. The bear case would be is if we wind up coming back down and then take out this low. I would say if we reverse this day, we're probably going to come down and at the very least retest these lows. And that would you can see would be a little bit iffy because it would put us below the trend. And I would say that if that happens, you've got to be thinking the next range could be in play. And that range is really from this 205.38. I don't have that range highlighted, but somewhere between 206.42 and 205.38, it's potentially possible that we would come down into that chop zone, which is sort of the beginning of the next distribution in terms of prices. So that's what I'm watching early next week. A couple of things that might lead the way, and that another thing that disturbed me a little was IWM. I had been talking about this being a channel within a channel, and on Thursday we firmly broke that channel, but we did wind up maintaining a close over the old highs, and the really key number of this 220.97 really up to 221.24, but really the key number for me is this 120.97. We held the 100-day MA, we held that distribution, but Friday we had a significantly weaker bounce than that happened in SPY. We never made it anywhere near the 50-day moving average, and the potential here is if there is some more rollover, we can easily come into this next price distribution of this 119.37 all the way down to the 117.37, which has been the real key line in the sand of sustainability. What was resistance should now be support. So if we do wind up coming down here, you can see this is the beginning of the next price distribution, volume distribution really. It starts really getting thick right around that area. So I would assume that that area should hold. If not, there's room down to the primary trend, which is currently, if we did it like Monday, would be in like the 111s, although I am not expecting that. So it might, coincide like maybe with these lows here by the time it gets down there. So maybe it takes a little bit of time. We'll see. So that is IWM. If IWM does happen to retake this bar and get back up into the channel, I would think that it probably has some room higher, probably back to the higher parts of the range. But IWM is showing significant weakness relative to the S&P. Qs. This also roughly held trend. You can see we've had some kind of dangling stuff below here. Here we actually opened below and rallied up. Here again, kind of we did close a little bit below, but then wound up taking it back. So we are above this sort of downtrend within the uptrend, and we are, I would say, not really in the upper parts of the distribution here of the 109.42, which is sort of like the first still higher. But anything in this really above this 106.25 and this 105.26 is still fairly bullish, I would say. Anything below there really starts getting a little bit more dicey for me for a bit of a move lower into range. But as of now, we are doing okay. Again, though, the thing that did disturb me was we never took the Thursday high. Again, relative weakness relative to the S&P. And IWM and Qs tend to be the more trafficked in momentum names, so I would be a little bit more cautious with this. You really do want to see us take this 109.17. And keep this in mind when I talk about Apple. VIX is relatively weak, even with the bearish action that we saw on that Thursday. The breadth in the S&P futures really never got much higher than like 3-to-1 negative. I don't think it may have touched 4-to-1, but I don't think it did. And it closed firmly below there. For the most part of the day, it was really like 1 and 2-to-1 and maybe even 3-to-1 negative. For a really down bad trend day, you'd really be looking for 5 to 8-to-1 negative, and we never saw that. And you could see even here in the VIX, it stalled in the 15s. It never even made it to the 17s, and it stalled on this 200, and it came back down fairly quickly. The one thing to be a little bit concerned about, as you can see, is that there are reference lows down here in the VIX, and that there's really not that much more for it to go. I mean, in 2007, it did peak, or I should say troughed at 9, and that was sort of the extreme obscene reading. But this area has been support, so just be a little bit cautious if you're, if you're stupidly duper loaded up long. However, we could be into, and we are getting a little bit below, you know, the lower part of the stochastics. We're not as low as here. We're a little bit higher still. But we could possibly be in for something like this long period of time down as maybe the market decides to rally up a little bit higher. But I am a little bit cautious with VIX being in the lower end of its range. TLT, in danger here of making a lower high and potentially a lower low. I'm not so convinced that we're going to see that just yet. You could see the 200-day moving averages here. You have this low. You also have sort of the 2009 crash peak that had been 123.15, and you also have a trend line here to hold it. So I would say that you might not get to see this cascade so easily. There might be some type of a pinging action here and some type of a throwback higher before you see that move lower, in consideration how steep it's come down in the last few days. So I would be looking for some type of a bounce. However, if this does wind up breaking and we do have a lower low, you may have a confirmed top in because you're breaking the sort of the swing low. This was this island reversal pattern that made now a lower high, and if you take that, this is going to be a little bit more bearish, and that's probably going to weigh on stocks that pay dividends. Think about the you know, the MLPs and such, and utilities for sure. The IBB had broke the channel within the up channel, although you can see the channel low is still a country mile away. It held the 100-day moving average, which was roughly in line with these lows, although this close here was below these lows. The next day we did get a bit of a rally back, but we have not taken that high yet. Still below the 50-day moving average, which had been the support for a while. So I am still fairly cautious in IBB, with an exception that I'm going to talk about a little bit later in the form of Gilead. And we'll talk about that in a little bit, and I'm going to talk about some of the levels there. If IBB can rally up firm next week, get back above the 50 and come up here, I would say that this was just a false breakdown, and we're probably going to make a play for the sort of the downtrend line and potentially making a move for higher. If this does give, this low in particular, I would say we're going to come down here to this volume distribution, which was also a prior fib extension, and also some resistance you can see into here. The 317.37, and then potentially to the channel low, which is currently in the 293s. I don't necessarily know if that's going to be the case, just because we've come down a lot and the bounces have been a little bit, I mean, they haven't been like these crazy bounces, but it may want to come down here. We'll see. Anything below the 50, again, I am more cautious in IBB. Apple. So Apple reported fantastic earnings. I know a lot of people want to, you know, look for chinks in the armor, so to speak. The real issue for me with Apple is that I think it just opened, it kind of gapped in after hours. The highs, believe it or not, were at the channel highs. And then I think a lot of people who had chased it here, playing for higher, you know, I always talk about how I like shake and bakes like this big down day, which took out a lot of these chasers before Apple earnings. We didn't get that. And even here, you can see, even after the shake and bake day, the earnings gap day was an open really on the highs and sell off, and then the next few days it recovered. But here it did not recover so quickly. It was down, the next day was down, the next day was a gap and go down, and took out both the 20 and the 50-day moving averages and closed fairly weak at the lower part of this area. And for me, I was thinking that the lower part of the range could be in play and potentially the channel low at some point. But we'll see. I mean, you had a reversal Friday. I had discussed that particularly on Thursday, that this was a buy at the 125, just because there was a put wall that I was seeing in the options. There was a lot of open interest at the 125 strike, and that really held held price in place. Let's see if we could find for this week what we're looking at here. Yeah, you can see here the 125 strike does still have a lot of volume, but it's not the 100,000 something contracts that had been in that area. So I would say that if Apple did wind up coming back down there, it may be attracted there. It might not be as strong of a support. And you could see really the high OI is down at the 120. However, there were significant volume that did take place these days, and that we'll know Monday. I think we'll have a little bit more of an idea Monday where things sort of shook out. The expected move for the coming week is about $4, believe it or not. So there could be some real action in Apple going forward. I don't know if that's going to adjust given the fact that earnings are out and the volatility should be less, but at the moment that is what is expected. So let's go back to the chart. Anyway, what I'm seeing as being the key for Apple is to get back up above the Dow Edition spike high in the pre-market, which is 129.85. Anything below there and really below this high of 133.60 to me is still a little vulnerable for a move lower. And that move lower could be somewhere to the range low, which may coincide with the 100-day moving average at the time, or maybe one of these channel lows somewhere. Right now it would be currently around the breakout, which is 119.75. If it pushes to this channel, it could be somewhere around the 117s. Although I'm not necessarily anticipating that being the case. I'm currently playing this. I had been long a put ratio. I was long the 127 puts and short 2 times the 125s, but on the rally I adjusted it, and I'm now in the 122s, 120s, just because I saw how violent this was, and I didn't really want to have to be in a position where I was on the defensive. I wanted to be able to be on offense and play it from the long side if it did wind up coming down into the pocket, so to speak. So I'm a little bit cautious with Apple, although Friday's price action was fairly bullish. But you really do need to see that high get taken and to get back above this 129.85. Otherwise, I will remain a little bit cautious. Above there, bullish. Below there, cautious. Keep it simple, stupid, right? So Amazon had come up to the channel high. You can see I drew this in. And it is now backed off to roughly about the midpoint of the channel. I'm looking to actually get long some Amazon. I don't know if we're going to necessarily get a full gap fill. It is possible. It would take it down to roughly to the channel low. But it seems like their numbers were pretty good, and it seems like there could be some room to go. There were some reference highs around this 408.06. So maybe sell some puts below there if you're looking, for kind of the Chicken Little way to do this. Sell some puts that would coincide with the channel low, maybe with these old highs. So I would say anywhere below 408.06 is probably quote-unquote okay. I like it more near dated. If you want to play it with shares, just look for a move. Maybe you had a reversal hammer this Friday, maybe something over the high, and then we could kind of get a move back up into range. But I was a little cautious below this day's low. As I've discussed, it has come down. I really don't think Amazon is, I really don't consider it too much of a short, particularly here, like playing, you've already kind of gotten a lot of the move. It's more about halfway or so in from the gap, and probably, where's the fib number, Fibonacci retracements. If you draw from this low to this high, it's roughly about half, you can see. Oops, this was the low here, the 374.40, let's redo that. 374.4, and the high is 452.65. That worked. That snapped. And you can roughly see we're coming into about a halfway point of that move. And I would say that this, between here and the 61.8, which you can see is about 404, roughly a few points below here, I think that area should hold Amazon. I'll leave that on there for now. I'll use it during the week. So that's what I'm looking for with Amazon. If you do want to play for the full gap fill, do it with some put ratios. Some that are around here and ones that terminate roughly around here. That should be, I think, an okay play. I would keep it in the weeklies, no more than the same week or the following week at the most. BABA, choppy mess. We are holding on to the range low sort of by the skin of our teeth. I would love to see something like this, where it like dumps early next week ahead of the print and then sets up for a long after you kind of get like a volume washout from all the weak hands who have been trying to play and chase in here. Not necessarily sure that happens. We may do something like rally ahead of the number, but I do think that would be the most ideal situation set up where some type of a break get some high volume in here, get out all the weak hands, and then play it for a shake and bake for a move higher. They do have a big lockup coming up in September, and I believe they really need to get the stock higher before that happens. So I would expect there to be some type of chicanery between now and then to get the stock up. BIDU, not looking very good. It broke. It took out the up channel, although I would say, you can see here, there has been some price movement on the wrong side of the channel, so to speak, before on the upside, so why not a little bit on the downside? It did come into some reference areas. I was sort of hoping for it to get down to the last time it reported, you can see we are below that low, so we were making sort of slightly incrementally higher highs. Now we're sort of we are making lower, not sort of, we are making lower lows. But it is into a pocket of support in here, and I think that anywhere between this like 194 and 191 is sort of, it was able to hold. We didn't really get there, so I would actually be looking to play this for some type of a long, maybe bounce back up into this area. If you can get, like, for like a day trade or like a couple of day trade, if you can get over the high from Friday, and then if you don't, you know, if you are still in this range, it's sort of a no touch until maybe if we were weak Monday and Tuesday and we came down into here, you can try 191 right or right out. If that fails, you know, then GTFO, keep it family channel here, but you all know what the F kind of stands for, and then, you know, look for a move to the range low. I would also say if you want to play this, the channel has been fairly defined. You could do it with put ratios, like maybe you buy up into here, which had been the prior support, and then sell down into here near the channel low. I actually may do that early this week just for, you know, shits and giggles, so to speak. So let's move on. Chipotle had a false breakdown below the channel, now kind of moved back up into it. I would say a move over the Thursday high of day, which was 635, is probably playable for a little bit more bounce higher. This is the lower end of range, so if you're going to do it, it's right or right out. If you lose Friday's low, though, I would be really leery, because that was sort of the Wednesday low and the Friday low, and then Thursday did wind up coming here, so you kind of have, I guess, a bit of a secure low here in place, because it is bookended by higher lows on either side. So if you do lose this Friday low, you kind of have to be out. But I would be looking to play this really more from the long side for a move back up, maybe to try to get to the top of the gap. So that's sort of what I'm thinking with Chipotle, particularly if the market stays bullish. If it's weak, then, you know, there could be some move lower. 613.06, I mean 09 was a key level. And then there's also a gap fill at around 589.93, which I think would be a great area to sell some out of the money, near dated out of the money puts into, if this did something like come down particularly pretty, like in a sort of a falling knife fashion, to get the IV jacked and to get everyone a little bit nervous and to shake out the chasers. But for now, I would say that anything over Thursday's high is a long, anything below Friday's low is a GTFO, maybe even a short. So that is Chipotle. Facebook, not making it easy at all. This stock has just been these crazy run-ups, these crazy corrections. It's roughly into the 61.8 Fibonacci retracement. It violated that a little bit with the LinkedIn after-hours gap low, although it did hold it here. So I am looking for some type of a bounce off this area to come back up, maybe to retest, you know, this sort of down channel that we've been in for the high, but there is some room, believe it or not, I hate to say it. If we lose this 60, I do see that the 78, 77 area is going to be sort of the real support here, now that we're below the 50-day and this area, assuming, no, not assuming, we're already in there. So I would say that this is sort of a measured move. Like if you look at this move here, these multi-day move down, this was $8.63 decline from this peak, which was the 82.17, which was the high for a long time, all the way down to this 73.45 low. So a measured move, if you measure from this high here, to this to down here is roughly 77. I've been talking about 77, 78 is really the true support for a while. It also coincides with the 200-day moving average. So I would be looking, in this area here for right or right out long. If you want to start building a position, this might be the area to do it. This is starting to get very steep, and if the stock is to maintain health, it should hold there. If this 77-ish area doesn't hold and it breaks, reluctantly, I hate to say this, but there is truth that it could come down to the 75 and maybe even look for 100% retracement down to 73.45. I'm not seeing that as happening yet, assuming the tape holds strong. I really want to see how this plays out here between this 76.96, roughly 77 and 78. If that area holds, we should spring back and go higher. If it does give, though, that is the risk for the next range. So keep that in mind. So that was Facebook. A lot of what brought Facebook down was some of its cohort in the sort of space. It kind of got hit, but it was sort of trying to hold its own, and then Twitter hit, and this thing just absolutely collapsed. I mean, they had the leak during the regular trading hours. You saw this move down. It roughly it's roughly on the channel lows though now. There wasn't really a rebound. You've had massive volume in terms of selling. A lot of these weak hand chasers are all now out or close to being out. I think you could play it right or right out versus this channel. If it does wind up coming down, there are some other reference lows here. This was the low here, this 36.07, and then the kind of the all-time low is 34.62. So if the channel snaps, see, we kind of really just held it by the skin of our teeth here. If that does snap, it could potentially come down to fill up the triangle completely to down here. That's the downside risk. If it does, and I do believe it will eventually move to the upside for some type of a throwback bounce. I don't necessarily know if you get all the way back, but I would say that you could probably come up to sort of like where this volume distribution begins. That's really where the real pain starts up here, and that roughly is around, let's just say 45. I've been saying it could get somewhere between 44 and 46 on a bounce. So that is my story, and I'm sticking to it. You can see the gap below of day here when it came up here was 45.80. So I think between this area is really the maximum upside I'd be looking for. You can see the high here of this gap down was this 44.58. So roughly in here, I think that there'll be some price memory, and it might struggle. So if there is some type of a move back up here, if you're trapped from higher, you might not be able to get it all back, but you will probably be able to get some of it back. Or if you're opportunistic here, this sort of would be looking where you're looking to sell, where all the pain really comes in. My thinking on this is that I had said that they need to see back-to-back good quarters. The quarter wasn't bad, but their guidance and their revenue numbers were misses, and again, we're now in reset mode, needing to see 2 straight quarters for Wall Street legitimacy. Although, however, between now and then, I do think it's going to be very choppy, similar to this type of a situation with false fits and starts up and down. So just don't get too crazy. There's probably some easier names to play in the space, like, the Facebook. I mean, I'll tell you, the Twitter metrics make Facebook look remarkably cheap. So that is my thinking there. FireEye reported. They were really disappointing. I had been playing this long. I had put my stop here below these 2 lows. I got stopped out this day. Really very frustrating to see this thing gap and be strong. I sort of, quote-unquote, knew that was going to be the case. But I was also worried with all the outside moves that, we did break a stop. I like to honor the stops. A couple of times out of 10, you'll have this, but more often than not, you could have this. And I really, with the outsized moves that we've been having and coming from a lower high from here, this had been an inverse head and shoulders pattern that I saw working, and it sort of failed. We got above it, and then it came down into this area, which was the gap fill. I still thought this was sort of okay. It got a little bit weaker, and I was thinking maybe we would see the channel low or potentially some type of a larger earnings move and come back into these lows, and I really wanted to be nimble to be able to play with that. So I sort of booked a small loss to prevent a big one and to still allow myself to have some opportunity. You can see Friday, the price action wasn't really all that great. It wound up being a gap and kind of gapping crap, and it closed It did still close above the neckline here, which was this 43.28. So if you're long, just use this Friday low of day as a stop. If it gets below there, I think it's just going to be in this sort of meandering chopping range with a risk lower. This really had good if you do get above these highs on Monday and Tuesday, I would say we're going to come back up to the old highs in the 46 and potentially to the channel high, which is 51 currently. So I've been fairly bullish on this. The pattern has been really choppy and messy, kind of sloppy, but you know, let's just use Friday's range now as the above that high higher, below that low lower. So that's my view on FireEye. Gilead, I'm going to add to my BTD list just because you had this big move up. You had a lot of people, it kind of come back down into the support. This also sort of stopped me out below the 50 and all these moving averages, also this reversal bar. That's really where my stop triggered. It was a little frustrating to see it stronger, and it sort of had this mild gap, and then it kind of just took off, and we wound up taking out these highs, although we did wind up selling off a little bit and closing below them. I'm going to say Gilead, if it can get above the Friday's high of day, this 106.34, will come up to fill up the gap into the 108s and potentially even move higher. The line in the sand for me is that it has to hold, I was going to say 203, but I'm looking at this, the low of the day here, which is close enough for government work, so to speak, is 102.5. So as long as you could hold this 102.5 to 103, I think that the path of least resistance for the stock is higher. I really would like to see it hold 105, though, because that was these highs. So below 105 is caution, and below 103 to 102.5 is GTFO. Anything above that area, I think, is still buy the dip, and the stock is still strong. So if it was to come back down into the pocket there, I would be looking for right or right out long, or to play it long over the high of day for Friday. That is how I see Gilead. Google was also a pop and flop. It had an inside move, came up into these highs, every opportunity to go higher, and it just wanted to sell off and go lower. I would say that if you want to play Google long, you can use Friday's low of day, since it's a reversal bar, and also roughly where this breakout was, as the stop, and anything over the high of day, I actually would be looking for a day trade long for a quick move, partial move up to the 50-day moving average, and then maybe even for a move back up into range. This has been under, you can see it's at a high volume node, so it's sort of put up or shut up here. The stock to me is got headline risk because of the EU and some other issues that have been coming into the stock, but I do like that Friday's range as a guide. If you want to play it short below there, it might be a little bit smarter to wait for a bounce if you're bearish on it, since we've moved down so much and it's into this pocket of support. I would be looking again to kind of play long against Friday's low of day, particularly with a move up over the high. I think that it would have some room to the upside. If you are still bearish, though, maybe some put ratios here, and then like playing for something down into these lows. That's how I would be. Actually, I might try and play it both ways. LinkedIn, major outsized move. It had been in this sort of similar consolidation pattern here. I guess everyone kind of thought higher, and kind of including myself, believe it or not, although I did say after Twitter I was really cautious on these stocks, particularly Yelp as well. That thing just completely imploded. I'm not really going to cover that in this video, but because we're running a little bit over on time. But you can see that this LinkedIn came back down into this area, this gap fill. It's also close to the 61.8 Fibonacci retracement, which is 189.56. So I'd be looking to play some type of a right or right out long there, or over the high of day here for some type of a move back into the gap, maybe even into these somewhere between this area, between this 216 and like this 225 area. Maybe it gets some type of a partial fill into that volume distribution. I'd probably throw a Fibonacci on that during the week. I might discuss it if I play it, but I think over the high of day here, since we did form a hammer, is probably playable for a little bit more upside. Anything below here, I do think it's going to come back lower. There are a lot of there's really a lot of room to primary trend down here, believe it or not. It comes in around the 168s. So if this does wind up coming back down here, I think a put spread or a put ratio with this as the terminus will work really, really satisfactorily. So that is my thinking on LinkedIn. Can I type here? Netflix. This has been just riding above around the upper channel, just sort of hanging out. I don't really have that much of an opinion on this, although, you know, it didn't really pull back a lot. It's just bull flagging. And I do think if you do wind up and you take out these highs, the stock is going to move significantly higher, maybe to this 596.67, which was the full 1.618 Fibonacci extension. Excuse me. So if you kind of break above these highs, the next 20 points should be higher. It may just do something like wind up grinding there. If you want to play this short, I would do it with some type of a put ratio where you're sort of long these here, the, let's say, 530s, and short 2 times the amount somewhere into the middle of the gap, like maybe the 5. That's probably not going to fill for a credit, not in the time frame that we're in, but I would wait for it to come down here, buy something into the gap, and then play for like some type of a gap fill. So you'd really kind of have to see it come down first before playing it lower for a put ratio. If you are adamantly to play it short, you know, the put spread. That's what I would do. I wouldn't be short the stock here, not with this type of sly choppy action. Netflix. Let's do Priceline. I know a lot of this. Amazingly, there's a lot of interest on my stream about Priceline. So I've been saying I thought that the Priceline was going to move higher on a break over these highs and a break of the down channel. Well, look where we closed on Friday. We closed on the right side of the down channel. So I think if you can, and plus Expedia had really good earnings. The move in Priceline was rather muted, but I do think if you can take this high of day here, this 1262.24, and you could see 1262 was roughly these highs. I think if you could take this, you will see some more up move into the print. I would prefer to see it kind of meander and just chop a little bit ahead of the earnings to give more of an opportunity. You know, Priceline tends to move a lot on their earnings. I mean, this thing could easily move like $100. So I do think, though, that I am going to stick to my guns. Anything above this 1262, I think it is going to trade higher. But it could also trade lower on earnings. I'd be really, really cautious on that if you're playing ahead of the number, and it would have to be, for me, a defined risk trade only. But Priceline looking like it wants to be a bit more bullish. Tesla, this did wind up kind of being choppy. It was a bit of a sell the news on the battery that Elon Musk sort of debuted. You did get a lot of short squeeze before that, and it did kind of come into some resistance. So I think that if the stock kind of just can grind sideways or even come down into the number, they already really pre-announced, and we know the number is going to be good. It's just a question of the guidance. So I also think it's just a matter of how the stock behaves. I think a move over this high here, this 238.75, will get you 245 to 249s with the quickness, and maybe with earnings get the gap fill up to 257.70. And for me, though, I would really love to see Tesla do something like come back down, load up the shorts again, get everyone, you know, who kind of chased here wrong, get the shorts loaded back and engaged, and then, you know, see this thing, play this thing for a shake and bake for lower and then higher. Although if it's ahead of the number and you want to, and you know, you get some type of a move over this for an intraday move, the momentum should be strong enough to get it up there. This was really gappy and kind of moved a lot, so the kind of sideways consolidation to me is kind of healthy. I think it's good. Anyhow, that's the end of the weekend video. I'm trying to keep it a little bit shorter. We've been going really long lately. If you're not following me, be sure to follow me on Twitter. My handle is @JustinPulitzer. And be sure to like this video and leave comments if you found it useful. And I'm going to post some links to the Wall Street Journal article that I was featured in, if people haven't seen it yet, in the description below. So be sure to check that out. Anyway, let's have a good week, and cheers.